Hello guys and welcome back to the channel. So this is a very exciting day. Rocket Lab has gone 8% up, and I found a tweet that I want to show you by none other than Space Talks. By the way, it's an amazing guy to follow. Fantastic new data, and he tweeted, Rocket Lab recently attended the TD Cowen 45th Annual Aerospace and Defense Conference, and he summarized the things that Adam Spice talked about, and they were just phenomenal. Like, they completely blew my mind. And I think he's the reason why the stock rallied 8% up today, because there was some heavy investors, I guess, on this conference, and then they decided to buy. That is my guess. And the conference itself is quite hard to listen to. I put the link in the description box below if you want to listen to it. And I was actually thinking we could do a shared listening session, so I will keep my commentary very little. I will have an eye out on your comments, and we're going to do it like this, and then I will probably have a follow-on video where I just summarize my thoughts about it. But I thought that this was very interesting to share with the audience and all the Rocket Lab investors, because really I want to hear for myself what was said, because the tweets were really amazing. So I want to give a special shout out to Arnie Trezzi. He's my first channel member on this channel. And if you want to become a channel member and support the channel and get a cool badge next to your name when you comment, you just click the join button next to the subscribe. I think that's where it is. But it's absolutely not necessary. I'm just happy you're here, and I will keep an eye out for the comments. I will keep the commentary to basically non-existent to a minimum, and let's have fun and let's see what Rocket Lab is up to.
And we are delighted to have with us Rocket Lab and Rocket Lab CFO. To my right, Adam Spice, and Colin Cantwell, the head of IR. And Colin's going to read a little interesting statement to start us off.
That's right. So today's discussion may contain forward-looking statements. All statements are based on Rocket Lab's current expectations and beliefs and may involve risks and uncertainties which are beyond Rocket Lab's control. Actual results may differ from those expressed by today's statements. Factors could cause actual future events to differ materially from the forward-looking statements in today's presentation. So with that, we'll take it on.
Great. So anyway, Adam, thanks for being here. You're the only space company that's both a vertically integrated satellite and launch provider and a merchant supplier to satellite builders with whom you may compete. Is that a viable strategy over the longer term?
We think that's the only strategy that's viable longer term. So the vision that we have is to be that end-to-end provider for a customer. We've gotten very strong signals from our customers, particularly on the government side, where they've said, look, for years and years, we've tried to enable partners that could provide that kind of turnkey solution. But it's very difficult because the kind of skill sets and capabilities to run a rocket company might be a bit different traditionally than for building spacecraft and then selling components in the merchant market and so forth. So we're getting tantalizingly close to being able to do that. So if you look today, we have on the launch side, we've got Electron, the most frequently launched small rocket. We've got a very strong position in that market, but Electron has a 300 kg orbit lift limit to LEO, which doesn't lift a lot of the satellites that we're actually building for folks. So ultimately, if we want to get to the point where we're an end-to-end provider, we have to have the launch vehicle that can support those larger spacecraft, which Neutron, which comes to the pad later this year, is the target, will enable us to do that. So you'll have the ability to design the satellite, build the satellite, and in that build be very vertically integrated with all the key subsystems. And we're largely there for kind of integrating the supply chain on the key subsystems. We also have the ability and currently operate satellites on orbit for the customers. So if you look at the two last big space systems contracts that we were awarded, one a few weeks ago from the SDA, which was a $515 million contract. That includes an operational element on the back end of that to operate the satellites on orbit. And we can do that because a lot of the ground station and other capabilities required to launch a payload into orbit are also the similar to operating the satellite once it's on orbit from a tasking perspective. And we acquired a company called ASI back in 2021 that gave us that on-orbit, command and control software capability, and they've been doing that for lots of commercial and government programs for years. So I think we're really, really close. I think the only piece that we're really missing right now to be that end-to-end provider is a larger lift capacity, which Neutron will bring a little bit later.
Actually, the point of the question, I get that, being a turnkey supplier is attractive to the potential customer. But I mean, like, the customer who buys a satellite from you, where maybe they know they're going to be competing with you, or buys a component, is that at all a drawback?
Yeah, I would say that, I'm relatively new to aerospace, spending, the prior 25 years in semiconductors. So this whole dynamic of co-opetition feels a little awkward at times, for sure. But it seems to be just the model that's existed for a long time. And, it's right now, if you were to look at our backlog and our funnel, there's a lot of revenue there that's tied to people that compete with us in other areas, to your point.
Right.
So I guess the question really comes down to what are their options, right? There are only 3, for example, space grade solar manufacturers in the world. There's ourselves, there's Boeing, Spectralab, and then there's a German company called Azure. So people really don't have a lot of choice. So they may not like it. It may be uncomfortable for them, but they don't have a lot of choice. When it comes to other components, they're heritage, as in the space market, is incredibly important. So if they have to ask themselves the question of how much risk do they want to take for moving to a part that's got less heritage than the one that they've been procuring from a Rocket Lab subsidiary, right? That used to be standalone. So I think it's yet to be seen. There's certainly, I think it's fair to say that there could be some revenue dyssynergy risk longer term.
Right.
But I think it's also not a trivial thing to get new space grade heritage solutions on the market.
Absolutely. So turning to the core launch business, so what are you've got an ambition. I can't remember whether the manifest was 22 or 22. What are the risks and opportunities around doing? I think we're estimating 19, 20, because things tend to move to the right. But so you look at the risks, you look at the opportunities. How should we think about all of that?
Yeah. So I'd say we've not been in a situation historically where we've had a satellite delivered to us from a customer for launch, and we've not had a rocket ready to launch that satellite.
Right.
Typically, customers are late in delivering their spacecraft, and that's the biggest risk to our manifest, is the customer pushing out. So every year, to your point, things have pushed out into the right. Last year was a bit of a unique situation because we had an anomaly where we weren't able to deliver one of our customers' payloads to the proper orbit in September, which kind of put us behind. Then we had to go through the whole FAA return to flight reviews, and then mitigate the issue to limit risk on future flights. But this year we feel very good, and it's a fully sold out manifest. We also every year, and it's becoming a little bit more predictable, I would say, that we have quick turn missions that come our way. So as a customer mission that we've had on the books pushes into maybe the another quarter or the next year because of their readiness, we can book kind of new stuff. And I think some of that is a function of the fact that Transporter now, from SpaceX is, if you want to get on Transporter, what we're hearing is it's a 2-year wait to get on Transporter. And, especially when you look at these proof of concept satellites that are getting launched in these rideshare missions, once they miss their slot, they don't want to wait 2 more years, right? Or they don't want to wait or get pushed out even 3, 4, months even. So they can come to us and get on orbit relatively quickly. So we see those opportunities. So we feel pretty good about our ability to deliver on the manifest that we've published. But to your point, there's always risks that the customer can create more lumpiness than you plan on.
So you recently recovered another engine. Discuss the next steps toward greater reusability of the Electron platform, and remind us how many 2024 missions are going to be reusable candidates.
Yeah. So if anyone's had a chance to look at the video from the launch that we had, was it a few weeks ago now? I think three weeks ago. We published some pictures and also some video, and you can see the stage as we recovered it. The stage looks phenomenal. So we've done, I think this is our 7th recovery of a booster. And this mission was really important for us because it represented what we plan to be kind of the last block upgrade of reusability for Electron. So more sealing of the stage to prevent water intrusion, really dialing in the amount of parachute requirements because that goes to mass and so forth. So the stage looked really, really, really good, really good. So we've reflown engines before. Now the next step is to refly an entire booster. And I've put my hands on these recovered boosters, over in New Zealand, and they've looked pretty good. Like each one, you can see the improvement. And from what I've seen and what I've talked to from folks inside, this most recent one is just it looks really, really good. So the plan is to do at least one more recovery mission this year, and then it's all about then how do we get a next step would be fly a full power pack, so 9 engines. So we've reflown one engine in the 9-engine mix is a reflown engine. Now we're ultimately building our way into reflying an entire power pack of 9 reused engines. The engines look great. I mean, I don't think there's a lot of concern that the engines aren't reusable. It was really more about, can we control the reentry of the vehicle to the point where you can avoid putting too much stress on the tanks and so forth, right? So that we've been able to dial in as well. So we feel very good. I think if you think about when kind of a reflight of a full booster, the plan, a year ago was to do that this year. I think now with all of the focus that we have on bringing Neutron to the pad, I think that probably is not really in focus for 2024 at this point. And we're really much more focused on supporting the higher launch cadence, getting Neutron to the pad, and then the incremental kind of value of reusability is something that we probably put a little bit off to the side while we execute those 2 more important things.
Right. So several of your launch competitors are no longer with us. What has this done to demand and I guess it doesn't do anything to demand, but I guess it could do something to pricing. And what impact on pricing might we see in the event of any of these other guys kind of leaving the field?
I think we've seen it, right? Because I think there's really, if you look at the folks that are out there, so obviously Virgin Orbit went bankrupt. Astra, kind of from what they talked about, looks like they've abandoned their launch program and are focused more on the in-space propulsion opportunity. So you really, on the small launch side, you have Firefly and ABL. ABL's flown once, blew up their pad. Firefly has flown 4 times with 1 successful mission out of those 4. So there's not, I'd say that, if you were to rewind the clock 3 or 4 years ago, the pricing pressure was pretty intense from these people who were trying to get there where we already were. That's really not the case anymore. We're not seeing that kind of pricing pressure because the folks that are kind of still in the game, they've got a little bit of a different, kind of value proposition. Like they're 1-ton vehicles, which, you take the small launch side where we're at 300 kgs, them aspiring to be able to deliver a ton, and then you've got the larger vehicles like Falcon 9 and ultimately Neutron. So we've seen actual pricing firm up, and the firming up of pricing has come from a couple of things: the fact that there's less capacity out there, also the fact that transporter is full, as we talked about. I think those are all things that have been conducive, and the fact that we've expanded now into hypersonics as part of our product mix, and those hypersonics missions come with higher ASPs than commercial launches, just because of mission assurance and all the special things that the government customer requires.
Got it. And so one of the disappointments I had, I think I asked you this question at some point a couple of quarters ago, and it didn't look like we really see that much of a step up in the ASPs in 24. So basically, when does this better pricing manifest itself in terms of your results?
Well, we kind of factor in some relatively modest, increases in ASPs. We're talking like our model says we go up 3% a year-ish, right? As far as price escalation for existing customers. I think it's really going to be more of a question of mix. So, for example, this year we'll have, 2 of these haste missions that are on the manifest. I think it's 2. And so they come with higher ASPs. So it's a matter of how many more of those can you get in the mix relative to your more price-sensitive commercial launch opportunities. So yeah, it's how much of the mix skews more towards your higher mission assurance, higher value opportunities. And of course, the big needle mover for us is really Neutron, because Neutron comes with kind of a Falcon 9-ish type of revenue per launch. So that's really kind of what, when you look at kind of the impacts to our launch systems segment, that's the real uplift for us is kind of Neutron, where if you look at a Neutron launch at nominally kind of north of $50 million per launch, that it becomes much more meaningful, obviously, than an $8 million launch for Electron.
Right. So they're really high fixed costs. I think you mentioned that several times of maintaining a launch pad, keeping the launch staff there. Help us understand the incremental margin potential in 24 if you really do get to 22 or 23. Is that the way to model it, incremental margins, or how should we think about that, gross margins?
Yeah, I think the way to look at it is, if you look at the current cost to support a mission today, it's about 1/3 bill of materials. It's about 1/3 direct and indirect manufacturing labor, and it's 1/3 overheads, right, which covers all the various kind of non-production overheads, but includes the things like launch and fuels and all those kinds of things. So if you look at where a lot of the leverage just comes from amortizing those fixed costs over a greater number of units. We can double production of vehicles by adding maybe 40% incremental direct labor, right, and no incremental indirect labor. The supervision kind of staff stays relatively flat. So the savings here, or the margin expansion, comes from the absorption of those overheads over a greater number of units. It really doesn't come from BOM savings, because we experience maybe like a 6% kind of BOM reduction kind of annually, which is not trivial, but it's not going to move the needle that much.
So really the way to think about it is for kind of a comparable mix of product, because obviously it depends, is better or leaner pricing. For a comparable mix, the incremental should be an adjusted gross margin should be what, 35 to 40%?
Yep, that's exactly right.
Okay.
Yep.
Okay. So how would you characterize demand in the medium and large launch market? I mean, yes, you're going to have an additional product, but we got SpaceX, we have Blue Origin, Vulcan.
Yep.
I mean, are we going to have too many players there?
I think we're a ways away from being at the risk of having too much capacity. Right now, there's an absolute lack of capacity. You can see that with the way that Amazon procured their initial batch of launches for Kuiper, right, where they basically awarded it, not unsurprisingly, a portion of it to Blue Origin. They awarded a portion of it to ULA's Vulcan, which is a vehicle that now has just recently flown for the first time.
Right.
And then they awarded a significant chunk to Ariane 6, which is not flown. So I think it's one of those things where SpaceX is clearly, the 800-pound gorilla that's providing most of the capacity of the market in that segment of today. If you go pre-Ukraine conflict and so forth, you had the Russian vehicles that were able to do missions. They obviously they're sanctioned, they can't do it anymore. U.S. payloads obviously can't fly on Chinese vehicles. So I think you're going to have a significant shortage in launch capacity for quite some time, because there's a lot of constellations that have yet even to really start launching, right? And so we think that if you look at those competitors you talked about, so you got SpaceX on one side, well, at the top, then let's say you've got ULA and Blue Origin. Rocket Lab is a very different breed of company. Like, we view ourselves as kind of the most aggressive, kind of out-of-the-box solution provider. So we have no concerns at all about how competitive we'll be able to be versus a ULA, for example, or even a Blue Origin. And it really comes back to, we see our bogey as SpaceX. I mean, SpaceX is our clear bogey. When you don't have the capital that Jeff Bezos and Elon Musk have, you've got to do things differently. And we do things very differently. If you think of the fact that, when we came public 2.5 years ago, we said we were going to deliver Neutron, by the end of 2024 for, $250 to $300 million. I mean, I think a lot of people might have thought, like, that's impossible. Just knowing what it takes to deliver a rocket of that size and complexity, we're doing it, right? And I think it's because we're doing things in a very, very different way. For example, we acquired a composites company in New Zealand that was building America's Cup yachts. And that allows us to accelerate the development of the structures for the vehicle and have that work, again, under our control versus outsourced. We were able to acquire an entire rocket factory when Virgin Orbit went bankrupt for 16 cents on the dollar, which gave us dozens of CNC and 3D printing machines that were already in place, calibrated, ready to go, but very lightly used because they didn't fly very often. So it's those kind of things that allow us to do what we're doing, but we go about things in a completely different way because we know we can't compete in the same way with Jeff and Elon.
Right.
We just don't have the same access to capital.
So switching to Neutron, what are the milestones we should be watching for? And is it on budget? What's the number to kind of get it to first launch?
Yeah. So if you look at investment to date, and, we said it was going to be roughly a $250 to $300 million program across R&D and CapEx.
Mm-hmm.
And keep in mind too, then we talk about Neutron, we think in terms of minimum viable product. So just like Electron is continuing to evolve, Neutron will as well. The pad infrastructure at Wallops will not be the final pad infrastructure. It'll be just what's required to get that first launch off. And then because we often employ or almost always employ the crawl, walk, run approach. So we've invested, let's call it roughly $100 million to date in Neutron of the 300. This year is going to be a pretty sizable investment year for Neutron with around that again. So kind of by the time we get the vehicle to the pad, it's around $200 million of, between R&D and CapEx. But we've also had co-investments from state and local governments that probably add another $50 million to that. So we'll be at about $250 million to get minimum viable product to the pad. So pretty much on time and pretty much on budget.
Got it. And what are the milestones we should look for?
So we've had a few key milestones. We had a successful pre-burner test, and one of the challenges, one of the architectural differences of Neutron versus other vehicles is that our Archimedes engine is really designed to operate at very low chamber pressures and very low temperatures. And the whole purpose for that is the lower pressure, lower temps allow for much greater reuse, so less refurb before the next flight. So essentially, we want these engines to essentially kind of get to orbit at idle, more than kind of really maxing out the engine that requires a lot of rework and refurb. And so, the next big thing there would be a hot fire test. So I think, we're targeting hot fire test down at our Stennis engine test cell of end of the quarter, kind of early Q2 is where we're at. And so obviously we're pretty close to that. So we know where we're at right now. I think we're pretty comfortable with those dates. And then we've already passed some significant tests on the upper stage tank, which is the most technically challenging piece of composite structures for the vehicle, given the performance requirements of that second stage. So really the next would be the first stage tanks and then kind of more of the rest of the structures. But really propulsion's the main kind of hurdle to get over because we're also reusing a lot of the avionics that we've flown 43 times on Electron, because the avionics don't really care whether you're dealing with a 15-ton rocket or a 300 kg rocket.
So really, in terms of things we would see, the hot fire test is key. And I mean, do we see the first stage test? I mean, you make an announcement after that, or?
Yeah, there'll be more. Once we get through that hot fire test, that'll give us a lot more confidence to how we kind of lay out the remaining development stages. I think Pete will be pretty disclosive about that on upcoming calls.
And then you will. The plan still is, hopefully, the target is to sort of launch by about year end.
Yep. The goal is to have a integrated Neutron on the pad by the end of this year.
Got it. Okay.
So probably the third leg of the kind of the milestones is around infrastructure as well. So we are launching out of Wallops. So there we have infrastructure already that are launching Electrons, but there's significant infrastructure investment required there that's progressing. But again, we've built infrastructure at that location before, but again, none of these progress, kind of elements of the program are easy or without risk. So, but everything right now, we've got a green light schedule that gets us to the pad by the end of the year.
There's a reason they call it rocket science.
Absolutely, there is, and it's not just the rocket, the pad, and everything else that goes with it.
So where are you in terms of marketing Neutron and sort of signing up your first customer? What are you looking for in that first customer? When's that happen?
Yeah, so we're active. We've been actively marketing, Neutron obviously for quite some time. The challenge you have with a new rocket is that it's a really bad situation when a customer commits their payloads to you and you're late, right? Just as it's bad when a customer is late on delivering a payload, doesn't have a rocket ready. So you really got to line things up And I think that once you get through the engine hot fire, then the customers can go, okay, now we can typically, when you look at how you can go from hot fire to kind of the rest of the rocket being kind of assembled, put together, we know that we're within 6, 9, 12 months, right? Whatever that is. And then they can start to assume some confidence in a launch schedule. So we've had lots of discussions. There's a lot of opportunities, but I think until you get past a few more of these near-term milestones, it's difficult to secure a commitment that's meaningful, right? We don't want to just take no deposit, easy to cancel contracts.
Right.
And we're also, Pete's been very clear that we're not going to sell launch at a discount. So, we've got customers that are expressing a desire to even be on the first flight of Neutron, which of course that entails a little bit more risk, and that there might be some pricing reflected in that. But I think we feel very good about the demand signal for the vehicle, but you probably won't see signed launch contracts, I would say, until again we get the hot fire test kind of behind us, which again is hopefully not too far off. So obviously, I would like to see something in the next couple quarters that would show a commitment to the first launch.
So you mentioned contracts, plural. So is the idea, so I refresh my memory, if you launch, let's say at year end this year, you would do what, 2 or 3 in
3 launches in 25.
3 in 25.
Yeah.
So then you basically would not necessarily, well, would it be one customer for 3 launches, or would the strategy be to try to get 3 individual customers for 25?
So we're in discussions with customers that want to take multiple vehicles, but it's better for us to build a more diversified book of customers. So I think it's probably not going to go to one specific customer, all that capacity.
And so, what's pricing look like? Given we have Vulcan, we have all these other folks are here too.
Well, Vulcan's a great pricing comp for us, so
right.
I think it's super supportive. I think the real pricing bogey is SpaceX. And so if you buy an off-the-shelf Falcon 9 today, it's going to run you about $67 million. And so, but it's that, if you look at our Neutron in its reusable form can deliver 13-ton to LEO versus SpaceX 16-ton to LEO. You kind of do that kind of, comparison of price per kilo. That's really kind of the bogey. So the bogey's been around $5,000 a kilo for a fully utilized rocket. Now, the nuance here is that, unless you're doing a large constellation deployment, you're not going to fill your rocket completely. I mean, Elon does it because he's just loading them up with Starlinks, right? So for if you have, like, for example, a more exquisite satellite from the government customer that, say, is a 7-ton payload, and SpaceX is going to charge $70 million for that, we can charge the same amount as they can, because if the customer needs a dedicated launch, they're paying for a full rocket, and it no longer comes down to price per kilo. It just comes down to, can you deliver the mission?
Right. Interesting. So turning to space system, how much commonality is there between the Globalstar contract and the recent SDA Tranche 2 transport win?
There's a lot of commonality. I think there's a lot of commonality on the technology front. If you look at our 2023, there's a lot of incremental R&D in our P&L related to developing those core capabilities and building out that portfolio. The SDA beta program leverages a lot of that technology that we kind of invested in for the Globalstar MDA. There's some incremental R&D, but I would say that there's a lot of commonality there. Contractually, they're quite different. Commercial contracts and government contracts look like, even though they're both firm fixed price, there's differences when it comes to, like, liquidated damages for delay, all that kind of stuff. Typically, the government contracts are a little bit more favorable than the commercial contract, particularly if you kind of dig into who the end customer is on the Globalstar side of things. Commercially challenging, I think is a good way to describe them. But I think that if you look at the way they're structured, there are milestones that drive payments. And then our revenue recognition against those contracts are not driven by milestones. They're driven by program execution and cost to completion. So give you an example, once we will have completed, call it 20% of the work to deliver the SDA contract, we will have recognized 20% of the revenue and 20% of the margin dollars on those, despite the fact that we may not have deployed equivalent amount of cash. Right. So we invoice the customer that allows us to procure long lead items. And so a lot of that's happening this year. but then the building of the satellites really won't take place until more like, I would say later 2025, 26, and then they fly in 27.
So the 515 million, how much is this year? How much is in 25? What's in 26?
So we'll have more color on our earnings call on the 27th with regard to that.
Mm-hmm.
But I would say, it's not a front-end loaded contract. I mean, because again, most of under ASC 606, the way that we recognize revenue, it's really based on effort, right? On kind of resources to complete the project.
Mm-hmm.
And so, there's certainly engineering cost to completion work that's going to drive revenue in 2024 from that contract, but the majority of the revenue doesn't come from the engineering phase, it comes from the build phase. And that's more in the 25, 26, and even 27.
Got it. And refresh my memory, does the contract call for an in-place satellite, or is launch separate?
Launch is separate. Launch will be procured separately under the NSSL program.
Right. And so are you going for launch, or, I mean, it goes in 27, so Neutron.
Absolutely.
Okay.
Yeah, we want the whole thing.
And so that's an incremental potential business. Do you have a competitive advantage having as a satellite builder and also a potential launch provider?
They're bid separately. I'm assuming the government customer has good reasons for separating the two pieces.
Mm-hmm.
But I would think that we'd be at an advantage, just because we'll have obviously much greater familiarity with ambient kind of conditions within our own vehicle versus kind of third-party ones that we'll be able to kind of pitch as a value proposition. I think we'll also be able to, since we own the launch vehicle, we'll be able to kind of guarantee I would say flexibility around getting those off. Like if there's a delay of the program for whatever reason, we've got the ability to accommodate for that.
Right.
So I think we're going to be in a very strong position, which again, comes all the way back to that kind of end-to-end model.
Right.
Even though they may be bid out separately, the real value here that we bring to the table is the end-to-end solution.
Right. Right. So you seeing any signs that others might want to enter as a fully integrated launch? I mean, like is Elon moving toward doing that? He's got his plate full, but
well, I mean, he's there. Right? I think if you kind of look to where we ultimately want to go, a lot of ways we want to emulate what they've successfully done, which is work their way towards the applications market.
mm-hmm.
So, SpaceX has chosen the consumer broadband and other applications on Starlink for their anchor application in space. We're working, we're evaluating a lot of different constellation application opportunities. But ultimately, we view end-to-end as not just kind of build and launch, but it's build, launch, operate, and generate a recurring revenue stream off of the end customer relationship. And so, Elon certainly SpaceX has done what, on every front, what we want and kind of desire to do. What they do differently is they don't sell their components necessarily or their satellite buses into the merchant market, which is what we do.
Right.
So we approach kind of the broader market opportunity. SpaceX is very, very focused on their walled garden and ecosystem, but they have every capability to do all of it.
Right. Right. So what's the longer term potential of becoming an SDA Tranche 2 transport supplier? Is it basically that you're there, and when we go to Tranche 3 and when we go to Tranche 4, you're basically have a competitive advantage?
Well, yeah, now we will be a qualified prime contractor to SDA. So, there's a lot of folks out there who are like subs to primes, the primes like Lockheed and Northrop and so forth. But, we are the prime. So, there's not only kind of the next waves of satellite kind of build contracts that will come out, but there's also going to be reconstitution, right? Because this is a long-term architecture.
Right.
So you get your foot in the door. It just makes sense that people will procure more of what you've already delivered to them as long as it works and it's a high-quality solution, which obviously people will have. So we think this is an enduring, long-term kind of sticky growth opportunity for us. So it was very, 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 very strategically important for us to get this contract.
Right.
And we didn't do it based on being the lowest price bidder either, because we know that now, right? So we went in there with kind of our target margins kind of in focus. We weren't going to kind of torpedo the model for one opportunity. So we think we've come out of this in a good position for kind of future contract wins and kind of creating that stable base of business.
Any thoughts now that you're in transport of kind of getting a prime package supplier and trying to bid into tracking?
Absolutely. It's all on the table.
Mhm.
It's all.
And-
One thing that we don't have, which is,
Mhm.
we have all what we think the most critical portions of the bus. We obviously have launch. It's the payload side that we have our greatest reliance on third-party partners.
Right.
And so that's strategically longer term. That's an area that we're going to look to do more incremental investment. So
Mhm.
as you're aware, we did a $355 million convertible bond raise
Mhm.
a couple of weeks ago. And what that really allows us to do is go and kind of inorganically work our way more into payload capabilities so that we can bring more and more of that under one roof.
Got it.
So that's key for us.
So as you look at the competitive landscape, so Sierra came, I guess I'd heard of them, but I never sort of like, who are these people? So all of a sudden they're there too. Are there other folks, that are sort of coming after you or not?
Well, all the known kind of
Right,
characters
the
are
known
there.
guys we know.
We were surprised by Sierra as well.
Okay.
Disrespect there, but I think that, for example, under their proposal, they've actually got to go, to my knowledge,
Right.
which is not perfect, but from my knowledge, they have to go out and secure a bus provider.
Right.
They have to go out and secure a payload provider.
Mhm.
And so it's very different than what we're doing, where we're the prime, we are the bus provider.
Mhm.
We partner with a sub for the payload. But I think that what that really points to is, the SDA's strategic focus on further developing the supply chain, providers for their solutions. And so they're stretching, right? So I wouldn't say that whenever they, give a contract to a Lockheed or a Northrop, that's not really stretching, right? That's exercising kind of a known capability. But bringing in folks like ourselves, like Sierra, hard to say who else they'll want to bring into their ecosystem, but it's all about creating a more robust and resilient supply chain for national security, which I think is a great thing. It's a great thing for us.
So what about the rest of space systems? How should we think about the growth trajectory of the components, the solar? Which of those have the greatest potential?
So the 4 acquisitions that we've done, and we've also have merchant solutions that we've developed organically, but of our components businesses, they're all growing very nicely. Every one of them is solid double-digit growth. Probably the most encouraging thing is the expansion of the gross margin on Solero.
Mhm.
That we're seeing develop in our backlog, and then also the fact that solar has been a real problem for programs because again it's as a program gets announced, the capacity takes a long time to add in solar. So if you want to add a new germanium reactor to build more capacity, that takes like 2 years. So it's one of those things where you don't want to be as a prime on a contract or building something for yourself, going to order solar and they say, sorry, we're out. We can't, talk to us in 30 months.
Mhm.
Right. So now that we've taken that, we can prioritize supply to our strategic programs. And to be honest, that's a lot of what kind of got us in the position to win that beta contract with the SDA is the fact that they're like, okay, you guys have a tremendous amount of control over your ability to deliver these platforms because you control things like solar, like reaction wheels, like software, all those different things. So it's an incredibly important strategic thing. And so that's why we view kind of the successful space company of the future has to be a much more vertically integrated one-stop shop.
Right.
But it's not an easy thing to do because it takes capital. It takes a very broad set of engineering capabilities and kind of engineering culture to do that. So we think there's going to be very few people that'll be able to get there. And again, I think we've seen SpaceX has already gotten there. We think that we're kind of the closest to that and closing that gap pretty quickly, especially with Neutron.
Right. So how should we think about the margin progression at space systems going forward?
So we'll see a continued expansion in the gross margins for space systems. And that's, again, a function of kind of the scale of the opportunities that we're doing and how we're finding, operating leverage in the business. Again, a lot of what we talked about, so the Globalstar MDA commonality on a platform level is being, shared across this SDA program as well. And then I would say that, as there's more capacity constraints out there, we're like anybody else. If it's a tight market, we're gonna kind of ratchet up our pricing, and we're seeing that across the board on our space system solutions into the merchant market.
Got it. So how should we think about your cash burn given the impact of the Neutron spend?
So, from again, Neutron is a very intense project in 2024. I would say, as we see growth in the rest of the business in 2024 on the top line and the margin expansion, most of that, if not all, will be consumed by Neutron. So if you look at kind of the kind of EBITDA profile, it's not going to look all that different in 2024 than was experienced in 2023. Where we really turn the corner is getting that minimum viable product to the pad at the end of the year. Then that we really will have crested the majority of that kind of initial R&D spend, and also from a cash flow perspective, the investment in infrastructure. So 2024 is, again, you hear this term and it gets kind of old and tired. And we say it's an investment year, but it really is truly an investment year for us in Neutron. But we think that we start to reap kind of the rewards from that in 2025 and beyond.
So you think you really should get a good turn in 25?
Absolutely, yeah. We think the middle of 2025 is kind of the real kind of turning point from a cash flow generation perspective.
So you recently did a convert. Why'd you do that? Why'd you do that financing at this point? You had some cash still.
Yeah, we exited the year with north of $300 million of liquidity. So the issue for us really was we were finding ourselves constrained from able to exercise some of those strategic inorganic kind of acquisition opportunities that we've done before. So we've executed on 4 of those. We think there's a significant number, and we always have a few deals that we're working in our process. So this raise was really all about being able to take advantage of those. And right now is a great time to be shopping because the ability to raise capital for most companies is very, very, very challenging. So we're seeing some real opportunities. Just like we look at 16 cents on the dollar for the Virgin assets last year, we see other kind of distressed assets that are quality technologies that we can add to our portfolio. So we have plenty of capital. We had plenty of capital to get Neutron to the pad and do everything we said we were going to do when we came public. What this does, it allows us to do things that are kind of off nominal and incremental to drive, longer term kind of strength in the business. And there's also the old adage, you raise money when you don't need it, right?
Oh, I agree with that.
Right, and it was this was, we believe, the most shareholder friendly way to raise a significant quantum of cash.
Right.
And as large equity holders, between Pete and myself and others of the senior management team, we're very focused on making sure we're doing equity friendly things. And so if you look at the terms that we were able to garner and the size of the capital and the flexibility of the capital, we thought it was the best solution for us. And we did run kind of a process that compared other alternatives, both kind of your traditional debt facilities, an equity raise, strategic equity partners, all those kinds of things. And this was the best path for us from a cost of capital.
Great. Terrific. Thank you very much. That was very interesting. Great.
Thank you.
Cool. So wow, it's over. We had almost 70 people at one point, which is very nice for this channel on this unannounced thing. Yeah, it was super bullish. I'm going to make a separate video about the things that he has said, but it seems like everything is on track. He's very, very confident. Neutron seems to be on track. There seems to be lots of customers for Neutron, or they're very happy with the demand thing. And it's basically confirmed that the launch can be expected 6 to 12 months from the engine hot fire. And he said that he's quite comfortable on giving the date that it's end of this quarter, which is within 1 month or early Q2. And he's saying that we're almost there. So he's very confident giving this news. And I can't think of a single thing that was not good in this call. It was like an earnings call on steroids. And this guy who was doing the interview, he was asking really good questions. Like, when are you signing contract for Neutron? Why did you raise the money? And it's also very interesting because so many people are thinking that it's Raycon in New Zealand that they're going to acquire. And he actually gave clues here. I need to catch again, but it sounded like it's a payload system that transfers the things like the payload in orbits. That's where they are reliant on outside suppliers, and they would like to acquire technologies or companies, and they see opportunities. And this is why they did this capital raise. So definitely it was for acquisition or, you know, buying of equipment, but I don't think it's for Raycon. Yeah. So thank you so much, guys, for watching. I'm gonna make a separate video on my thoughts about this, and I'll see you in the future videos. Make sure you're subscribed, and yeah, see you in the next one. Ciao, ciao.